Hello, everyone. There's a recording in progress. I hope everyone had a wonderful day and has spent the last week enjoying the sunshine, because before we know it, it's going to become cold again. So today's webinar that we're doing in the transition to practice is going to surround business structures. And this is probably one of the most common areas of questions. So hopefully by the end of my little chat here, and that after we answer as many questions as you guys have, then we'll hopefully have taken care of some of the questions that you individually have. And I do fully encourage the questions in the chat area. We will certainly address those, each and every one of them, probably in about 20 minutes or so. And I guess away we go. So let me just make sure this is working. There we go. Okay. So financial plan. So as I said last week, if you attended, and I'll repeat, a financial plan involves these 5 areas. In the middle is your cash flow management. Why? Because it pretty much impacts every single area that you look at. If you're working with someone who professes to be a financial advisor or planner and they don't look at your cash flow management, then they're more than likely just a salesperson of products, because cash flow is very, there's very little commission earned on helping people. And so not enough people spend time in there. It is by far the most important part of your financial plan. From there, we look at insurance planning, which basically is if you can't get up in the morning and go to work and you're still with us, who's providing a replacement of your income, and if you're gone, then who's replacing income for those who you leave behind, and or eliminating debts that survive you. Tax planning, as I have always said, and anyone who's seen me speak before knows, I always say it's okay to pay tax. It means you're earning a living, but the government service stinks, so let's make sure you're not tipping them. And that's exactly what I do when we look at tax planning. Investment planning, that's where, hey, I've got an extra dollar, where is it best spent? Investing, paying down debt, et cetera, et cetera. And then legal and estate planning. Do you have a contract with your clinic that you're an independent contractor for? If you own a clinic, do you have contracts with all the individuals that you have working as independent contractors and the like? And today what we're going to do is, again, focus on how businesses are set up and what types are available to people to implement, because this is really one of the first questions that I get whenever anyone reaches out, whether they've been in the business for 5 minutes or they've been in it for 5 decades. So let's move right along and talk about business structures. In today's agenda, we're going to look at what an employee is, what a sole proprietor is, i.e. an independent contractor. And I just noticed I didn't put the close bracket at the end of contractor. Oops. That's what happens when you don't pay attention. And obviously I wasn't when I put this together. So my apologies to everyone. We're then going to look at partnerships. And finally, we're going to talk about corporations, because I'm guessing there's at least one attendee who wants to know, should they incorporate or shouldn't they, and what's it all about. So moving back here, and then again, we'll open it up to questions. So what the heck is an employee? Basically, an employee is an individual who works for an entity other than themselves. That's the sort of simplest definition. You're paid a salary. Your employer is responsible for pretty much everything. So it's like having the old proverbial big brother who takes care of taking off taxes and remitting that to the government, takes off the employer share for Canada Pension, and make sure that they deduct your portion. And sometimes they are even great and will provide you benefits. But that's an employer-employee relationship. Your work is completely dictated by your employer. So you're going to get 2 weeks holiday. You're going to work X number of hours. You're going to be responsible to be at the clinic or at the hospital from 8 a.m. to 8 p.m. or whatever your shift is. And they'll dictate everything, including whether or not they're going to let you do anything out of the box. And although you can use an accountant as an employee, really all you're going to do is get what's called a T4 income statement, and it comes in various formats. But it's basically going to say this is what your gross income was, this is what was deducted off your salary, these are your taxable benefits, and this is what you put in line. I think it's 252, but I'm not an accountant, so don't quote me on that, in your income tax return. Really easy. You can't really deduct very much because you don't really have expenses of any kind other than maybe education. Those you get to deduct as a tax credit for the courses that you take. But you can use tax planning software or go to H&R Block, not that I'm plugging them over anyone else. In fact, if you can find someone else, that's probably just as good. But you probably don't need to be spending a ton of money on an accountant unless you have a spouse who happens to have their own business and your tax return gets thrown in as a freebie, but the business pays an arm and a leg. So that is an employee. What is a sole proprietor? You work for yourself, commonly referred to as self-employed and often as an independent contractor. So independent contractor and self-employed, they're the same thing. If you're hired at a clinic as an independent contractor, it depends on the contract between you and the clinic as to whether or not Revenue Canada will see you as self-employed. Okay, so that's really a very important thing. Now, when you're an independent, you're going to get paid your gross income, which means that they're not going to take, the clinic's not taking off any taxes. They're not taking off Canada pension. I mean, EI, you can have that done if you want as a self-employed individual. I generally don't recommend it. But at the end of the day, you're responsible for everything. And so making sure that you're putting aside money on a regular basis every time you get paid is really important, because the following April, you're going to owe taxes on your full income. And eventually you're going to owe enough tax that Revenue Canada is going to say, hey, hang on, we don't want to wait a full year to get your tax money. We're now going to let you pay it every 4 months in quarterly installments. When you work in this fashion, again, for a single clinic or a multiple clinic, it is really, really important that you are not deemed by Revenue Canada to be an employee. And I again come back to the contract that you have between yourself and a clinic that you're working with. And you can be independent with Clinic A, an employee with Clinic B, and own your own clinic where you rent a chair or something along those lines. So you can be multifaceted at any given time. But when it comes time to be an independent contractor and contract at a clinic, the clinic contract has to stipulate that they're really not controlling your hours, that you're paying for your supplies, and usually what that means is that the clinic you'll invoice the clinic, and they'll pay you net of, you'll invoice, let's say, for a 70-30 split, let's say it's $5,000, plus you incurred 3,000 of proportionate needles and laundry and secretarial services, reception services, and they'll end up writing you a check for the $5,000 because they'll charge you for all those services. It seems kind of odd to do it that way, but that is going to allow you to maintain your independence and not be seen by Revenue Canada as an employee. When you're an independent contractor, again, self-employed, you're not going to be able to partake in any benefits that a company or a clinic is offering without endangering your independent self. There are ways to get around that. In the event that medical benefits are really important to you and you're willing to pay a hefty amount of premium, then there are ways to set it up. You just need to have your clinic agree to provide you the opportunity, and that's not going to impact your independent contractor status. If you're a clinic owner or if you're an independent self-employed individual and want to know more, You can reach out to Ali. She'll send your email to me, and I'll get back to you. Or for those who have connected with me on LinkedIn or receive any of my email newsletters or want to, you can always just email me directly, brian@brianschumack.com. All right, what else? You pay tax based on total income, less your eligible expenses. So eligible expenses, that's where you start getting into the reason why you want to make sure that you're using the services of an accountant, because you may be able to deduct part of your motor vehicle. You may be able to deduct part of your transportation costs, gas, insurance. You may even be able to deduct your internet at home if you have an office at home. You may be able to deduct part of your home. You may be able to deduct part of the rent or part of the mortgage payment. There's all kinds of different things that can become an eligible deduction against your income. And what does that mean? Let's say you earn $70,000 and all of the available deductions are equal to 15,000. You're not going to pay tax on the 70,000. You're going to deduct all those expenses, which means that means you have left 55,000 and you'll pay tax on that. So it's really important to know what you can and can't deduct. And it's also important to work with an accountant because they're going to be able to tell you, hey, you know what, this year they're looking at line 194, and that happens to correspond to home offices. So if you claim above a certain level in the home office, Revenue Canada's computers will flag you and you'll have to prove that. Whereas a good accountant will know, and they'll put you at just below that deductible level, that attackable level by Revenue Canada. And so that's really important. An accountant costs, they can be anywhere for a self-employed individual from a couple $100 up to about 1,500, maybe 2,000 if you have a really complex situation. But you shouldn't be spending $5,000 or $6,000 on an accountant if you're self-employed and not an incorporated entity. So that's a sole proprietor. Now let's talk about partnerships. In a partnership, you work for yourself with at least one other individual. So sometimes you'll have multiple physiotherapists working together because they want to pool their resources so that they are ordering greater amounts in bulk. You could have a situation where one of you is the sales side, the other is the practice side. You can have one who is skilled in the financial side of things and one who's skilled in, again, the practical side. And the split never has to necessarily be 50-50. It can be 80-20. It could be 80-20 the other way. You can have multiple partners. You could have 10 partners if you want. A word of advice, the more people that you partner with, the greater the likelihood of animosity at some point in time, because trying to get multiple individuals to agree to something becomes much more challenging, as I suspect some of you may already know. You're still deemed self-employed. So just like a sole proprietor, what you have is you have a sole proprietor and a sole proprietor that are going to share income and expenses. Excuse me. So let's say the clinic, there are two partners. Clinic earns $500,000, has $100,000 of expenses. There's $400,000 left. For ease of this discussion, it's a 50-50 partnership. That would mean that each of the physios earns $200,000, and then any additional deductible expenses that just you incurred, not the clinic, can then be deducted at that point in time. And again, you want to make sure the profit that you're going to share, that you probably are best advised to use an accountant again, because again, there are complexities, in particular with the various expenses. You're going to be filing sort of a business as well as an individual, but in a combined format, and you're going to want an accountant to work with you in that format. Corporations. So, well, I'm sure a lot of you are here to inquire about that. In a corporation, it can be just you as the owner of the corporation. It can be you and others, and you can even own the corporation with a company. Okay. So there's what's called the operating company. That would be the clinic. You can have individuals owning the shares in the corporation, or you can have holding companies, is usually what they're called, that own the shares for that person. So again, you can be an individual, it can be multiple shareholders. The key thing is that you can also be an independent contractor of that corporation. So let me just pull up all these things here just so that I'm not looking there, I'm looking at you and focusing on you. So your income is going to be either a salary if you're an employee of your corporation. So here you are as an employee, so you're taking a salary. You can be, as a business owner, you can receive a dividend from the company. You can also receive a share of the company, and it can be all three of those things. And what generally governs how you're paid from the corporation as one of the shareholders is dependent on the advice of an accountant as to what the most tax efficient way is for you to be paid. Because dividends tend to attract a lower tax rate than does salary. Okay, shares of profit, it can be repayment of money that you put into the corporation at a various point in time. And so it's really, again, so incredibly important that what you're doing is working with an accountant. Don't try and do it on your own. You're going to make mistakes, and mistakes when it comes to dealing with Revenue Canada can be very painful, and you don't want to incur their wrath. There are two types of corporations. There's a general services corporation. Anyone can be a shareholder in a general services corporation. Okay. And then there's a professional services corporation. Now, various colleges will dictate whether or not the practitioner in this case has, when they incorporate, has to incorporate as a professional services corporation for the practical side of their business. And as a physiotherapist, that is the way you have to incorporate for all physical therapy costs. So if you're seeing patients and you're incorporated, it has to be as a physiotherapist, a professional services corporation. If, however, you're also having massage therapy, you're selling orthotics, supplements, whatever, as long as you're not contravening what the college says you can and can't do, and I know there are strict rules, that income can come through a general services corporation because it's not practical. You're not conducting physical rehabilitation. And that must be professional services corporation. General services corporation can be anything else. Okay. What's the difference? I'm so glad you asked. So a professional services corporation, the practitioner, there's no alleviation of liability, meaning that if you do something that you're not supposed to, or if a client thinks that you've done something that you're not supposed to, they will sue you through the corporation, but there is no alleviation of liability when it comes to practical services versus a general services corporation, where if you didn't, let's say you sold a service of some sort that was not a physical therapy service, and that was billed through a general services corporation, the individual can try and sue you individually. They'll sue the corporation, they'll sue the manufacturer of the product, et cetera, et cetera. But your liability as an individual is going to be significantly reduced because you've got a corporation sitting between the person who's suing and you who's being sued. And that is, really quite important, because the last thing that you want is to get sued and have your house attacked by creditors, et cetera, et cetera. And that's why often when you have a individual who's incorporated, the spouse is the one who owns the properties, et cetera. So those are the two different types of corporations there are. The other difference between the two is that as a professional services corporation, the only other people that can be shareholders have to be like practitioners. So you can have physiotherapist, but you can't have physiotherapist, chiropractor, massage therapist, all three being shareholders in a professional services corporation. For that, you would have to have a general services corporation in existence if you wanted to have multiple owners from different practices. Okay. There are a lot of nuances, and rather than try and cover all of them here this evening, I think it's probably a good idea that we start looking at questions, because I've probably thrown out enough stuff to everyone, and we should be opening the floor. Again, these are all the various services that I offer. So if there's something there that you're interested in and we don't get to it today through someone else's question, then by all means, reach out to me. There's my cell phone number, and you can also email me at any point in time. And if you spell my name correctly, you can check out the website as well. All right, Ali, Amy, let's open it up to questions.
Sounds good. I'm just going to give everyone a couple minutes to put
Yep.
their questions in the chat, but I can start with one actually, Brian.
Sure.
When you were discussing being an independent contractor, being self-employed, you said you don't recommend enrolling in EI. Why is that?
Great question. So I think it was about 7 years ago, 8 years ago, the government said, okay, we'll let self-employed individuals sign up for EI. First, you have to pay the premiums. There's no guarantee that the premiums will remain at the cost that they are presently. Secondly, once you start paying into EI as an independent contractor, you have to pay for it right through your career. So it's not, oh, I'll pay for it for the next 6 months, I'll have my child, and then I'll go back to work and I won't pay. No, independent contractor, you will have to pay ad infinitum. And unless you're going to be off of work at least 3 times for a period each time, it's not going to make sense. And that's based on the premiums remaining the same from now until the day that you go to retire, which is highly unlikely. So that's why, as a rule of thumb, I don't promote independent contractors from enrolling in EI. I think you're better off taking money and setting it aside into a tax-free savings account and using a high interest savings vehicle in that tax-free savings account, so that when the time comes that you're going to go off on paternity leave, maternity leave, you're better off doing it that way, because you're not on the hook ad infinitum.
That's great. Thank you, Brian. Not sure if you can see the chat, but we have a couple questions.
Just give me a second. I think I saw Vince's name up there.
Yeah, Vincent's first.
Okay. How does he review a sole proprietor that has only one clinic that he sends in? Okay. So it really is, as an independent contractor. So Vince, let's say you're working for Brian Shumak Physiotherapy. Don't worry, I'm not coming into your business. Okay, I have enough, my hands full anyways. But let's say I had a physiotherapy clinic and you're only working with my clinic. It depends on the contract that you have between Vince and Brian Shumak Clinic. If that contract stipulates the parameters that are necessary in order for you to be deemed an independent, then everything's fine. If, however, the contract that you have doesn't meet the certain criteria, and you can Google it, you can email me, I'll send you an article. It's a long time ago, but it's still applicable. It really comes down to the contract between the practitioner and the clinic. Okay, I hope that answers the question. How does CRA view a sole proprietor? CRA will view you either as an independent, self-employed individual or as an employee, and it will all depend on the contract between you and the clinic. And so you can have one clinic, you can have 10 clinics that you're contracted with. You could, and let's say all 10 say that you're an independent contractor. 5 of the contracts are CRA will agree you're an independent contractor based on what it says, and the other 5 contracts are pretty weak, and so they'll say, nope, this is an employee. And that's whether you work elsewhere or not. Okay. What do we got? And Vince, pipe up if that didn't help you. Sam, not sure if this is okay. Well, whether it's relevant or not, I'm still going to answer it, Sam. Best place to look for disability insurance. I'm going to come back to that in 2 seconds. You've already highlighted some key points, but anything else here? Looked at generally they want you to work at multiple clinics. No, you don't have to work at multiple clinics to be deemed an independent contractor. Again, it comes back to the contract between you and the clinic. So Sam, you can work for one clinic only, and you could be deemed by Revenue Canada, depending on the contract between you and the clinic, to be independent, or again, depending on the contract, you could be seen as an employee. Okay. As for disability, in 2 weeks, we'll be talking about disability. But Sam, I'm not mean. I'm not going to make you have to sit and wait 2 weeks. So where do you look for disability insurance? In my opinion, the best place to look is to an individual disability insurance program. There are two primary disability carriers in Canada at present. One of them is through RBC Insurance. The other one is through Canada Life. And generally, physiotherapists are going to do better through RBC. There are nuances that you need to be aware of, and I'm more than happy to offer any assistance in that realm. Reach out to me anytime. It is something that I work with my clients on as well. See 2 more messages, and Sam and Vince, pipe up if I didn't get there and answer. Margaret, would you recommend to have both types of corporations for someone as a private physio practice, but also hire independent? Okay. Great question, and I knew it was coming, Margaret. That's why I'm chuckling. So what Margaret is asking is, should you have a general services corporation and a professional services corporation? And my degree's in psychology many moons ago, and the answer is, it depends. With that being said, it really depends on the generation of income that is going to come from a practical side and from as a physiotherapist, and a general side, either by having other practitioners in your clinic and you're the owner and you're doing a split with them. It all depends on the amount of money that's going to go through the various types of corporations. And that's something that I often get asked about is, Brian, when or should I incorporate? And the answer is, there are really, the first reason is definitely not a financially viable one, and that's because your ego insists that you have an incorporated entity. That as a financial advisor is a no-no. The second reason is that in order to secure contracts, you are required by the party who's going to hire you to do that to be incorporated. Next, and most common, is that you're generating enough money that it's not a flow through. So Margaret, you're saying, should you do both? Well, if you're generating enough money and you're able to leave money in both corporations, then yes, incorporating may make sense. The amount that it generally requires in order to make sense, you have to be leaving about $50,000 each and every year before it becomes tax effective. Because understand that every time you have a corporation, it's a taxable entity unto itself. So you're going to file a personal tax return, you're going to file a corporate tax return. And so corporate tax returns are not as inexpensive as I mentioned for the personal. Corporate tax returns are going to run in around $2,500. And so you're also going to need to get different liability for the corporation. You're going to need to get additional licensing potentially for various things. And then if you add a general services corporation on top, you've got to be able to save that income in both of those corporations for it to make sense. And that's why it may make sense to only have the professional services corporation, or it may only make sense to have the general services corporation. To answer that would involve dealing with a financial advisor to look at the whole picture and then confirming that with an accountant to make sure that it is indeed the right move from a tax planning standpoint. And I know that, like that diagrammatic at the beginning of this webinar, I do look at tax planning, and I look at whether or not you should be incorporating, and then I know enough to get us into trouble, and then I refer you back to your accountant to get us out of trouble. And if you don't have an accountant, I can certainly refer you to someone. Okay, so that would be Margaret's question. Rushy, hi Brian, from professional so taxation. Okay, I'm interpreting Rushy, and I hope I'm right. Which is better to incorporate as a professional services corporation or a general services corporation? And I'm going to go right back to the first thing I said to Margaret, and that is, it depends. It depends on how your clinic is set up, depends on whether you're incorporating as an independent. So in other words, you're making enough money as a independent contractor, and you're working at multiple clinics or at a single clinic and making enough money. Then it depends on the relationship and how you wish to get paid from the clinic, okay? Because you're going to bill the clinic for your time. You can bill it as an independent contractor, or you can bill it as a professional services corporation. The clinic's going to pay. And then if it's a professional services corporation that they're paying, then it depends on how the different types of income that you take out of your professional services corporation. Okay, so again, the answer really depends. And for those who have very good hearing, those are my two dogs. I have no idea what they're barking at. I'm guessing it's a fly that's flown by the window. Please excuse them if you can hear that. Okay, we got another message here. Okay. Sam, thank you. I have to attend another meeting. Okay, Sam, you've probably long gone by now. Emma, if you're clinic owner of one location, currently single practitioner, but looking to hire another PT, would you recommend remaining a sole proprietor or professional corporation? When it comes to hiring another physiotherapist, whether you're a sole proprietor or you're a corporation, doesn't generally make much of a difference if you're hiring that individual as an employee, okay, or as an independent contractor. It really boils down to whether or not the clinic with two of you, so your generation of income and your share of the physiotherapist that you're hiring income, and whether or not you're going to use all of that income year over year, or if you're going to be able to leave money inside the corporation. In the past, it certainly made sense to incorporate from a tax planning standpoint, even if you weren't leaving 50,000 year over year in the corporation. That's 50,000 each year that you're leaving in the corporation. But the government has plugged up so many of the advantages to incorporation that really there's only the end of the day tax. And you have to, for example, the government just changed the rules when it comes to capital gains. So it used to be that it made sense to put a clinic, a building in a corporation and own it that way. Well, now the corporation, upon sale of that building, is going to pay a much higher rate than an individual would on the first $250,000. So there's a lot of planning, and what I would speak to today may change. But as a general rule, Emma, it really is dependent on, are you going to be able to leave enough money in either the corporation, and if not, then sole proprietor or taking on the physio as a partner is also okay. The one thing, and I forgot to mention this, when it comes to working in partnerships or working as shareholders in a corporation, you must implement what's called a buy-sell agreement between the two or more partners or shareholders, because in the event that someone passes away, becomes an alcoholic as an example, and is not recovering and is detrimental to the business, you need a legal document that stipulates how things are going to work. Because if you have Emma, you go into partnership with that other physiotherapist, and that other physiotherapist is married or common law, and in their will, they're going to stipulate what happens to their ownership portion. If you don't have a buy-sell agreement that supersedes the will, then you're going to become partners with that now deceased shareholder's heirs, and they may not be physiotherapists. They may not have any idea what to do, but they're still going to dictate all the decisions that can be made, be it in the partnership or the corporation, because they're going to have a voting share. Okay. Let's see. We go 4 new messages. This is very you mostly answered this already with your flow through comment. Thank you. Awesome. Thank you so much. You're very welcome, Emma. Lopa, how to manage a situation where you're an employee with the clinic, but you also want to provide physiotherapy services outside my work over the weekend. How to manage my taxes if I provide my services in part-time is so, okay. So Lopa, the first question I would have is, does the situation where you're an employee allow for you to practice outside of that clinic environment? Because your contract with the clinic may forbid you from practicing, or it may forbid you from practicing on your own time within a certain parameter, et cetera. And then you need to speak to a lawyer as to what you can and can't do. If you have the ability to work as a self-employed individual, in other words, outside of the corporation, it really is a case of how much money you're going to make. Because if you're not going to be, if you're going to make money and you're going to earn $15,000 a year doing that on the weekends, that's not enough to incorporate. You're better off than just being an independent contractor for that part of your business, and then filing a tax return with the assistance of the accountant, because now you have 2 streams of income, one which is as an employee, one which is as a self-employed individual. And the only other sort of thing that you need to be careful of in that situation is that the tax that is being taken off with your employment situation, if you now increase your income, that tax may be insufficient to be held back, and you may need to increase that. And that, again, is something that you would speak with an accountant for. Okay, I hope that answers your question. If not, Lopa, please. And I hope, by the way, I'm pronouncing everyone's name correctly. But if it doesn't answer, please ask again. And Javad, hi, Brian. Thank you for a webinar. How serious someone that is a student working part-time as an employee for a university, employee contract for another part of the university, independent contract. Okay, so great question. So Javad's asking, what if I'm various permutations and working 7 different jobs, some as an independent contractor, some as an employee? In the same way that I was just saying to Lopa, you have your personal income from self-employment and you have your employment income. They're going to go, as long as there's no corporation that you have, they're all going to be filed as an individual. Okay, so to be based on total income. When you have multiple places like that, again, as I mentioned for Lopa, you have to make sure that you're having tax withheld as an employee at a high enough level, because otherwise the bill at the end of the year, the tax bill, is going to be much higher than you're going to be ready for. So you may need to go back and ask them to take off more taxes. And again, when it comes to cash flow management, I don't know if you were here last week, Javad, but I spoke about the importance of making sure every dollar that you earn as a self-employed individual, that you put 30% of it away for tax savings. Okay. If you didn't attend last week, go back on the site once the webinars are up and take a look. That will certainly assist you in making sure that you're not, come the following April, caught in a tight spot because you weren't prepared to pay as much tax as you may have to pay. All right. Okay. James, FinSam and others document discovered very factor tests without a particular working. Okay, so I don't know if everyone can see that, but James, thank you. There's a link to common law tests in determining an employment relationship. Most of the time, when people ask me questions, I go to Google. And the one thing I would caution about with Google or Bing or any other search is that you can find as many yeses to something as you'll find no's to something. And so it's important to look at how it impacts you and you specifically, because it may sound phenomenal, but it's not really applicable to you. And that's where a professional who knows the physical therapy world and who knows overall finances would be terribly advantageous, because you're not expected, you don't generally get taught much about finances in order to become a professional, and they don't teach it in school, not yet. There are a number of us that are trying to get it taught in schools, but that may come in a while. But James, great link, thank you. But again, anything you read, see, hear, books, TV programs, the dreaded non-licensed influencers that are out there on the internet, you want to make sure that it is really applicable to you, and you want to know what the motivation is for the person who is putting forward that idea. Are they getting compensated? If so, how? Because their advice may be governed by that conflict of interest, and they may not be required by law to disclose it. Okay, so another message. Yes, that, okay, Lopa, great. Upcoming, okay, Amy posted the upcoming webinars and the registration links. What else? Rushy, are we able to withdraw the money as a dividend or share from professional corporation, like from the jet? Yes. So what Rushy's asking is the method by which you get paid out of a corporation. Does it matter whether it's a professional services corporation or a general services corporation? The answer is no. You can take a salary, you can take dividends, you can share profitability. Sharing profitability is going to be if you have other shareholders who are also physiotherapists. So that takes care of that. And I think that's all I'm seeing. Okay, great, thank you. Emma, are there any questions you recommend asking a CPA? Absolutely. The first is, how much do they charge and how do they charge? And it can be CPA, whatever the designation is. It can be just a tax preparer. You want to know how they're getting paid. You want to know their experience. You, in particular, want to know their experience with small businesses and with the healthcare community, because there's a great difference between a plumber who's incorporated and a physiotherapist who's incorporated. So if you've got an accountant who works generally with small businesses, but they're all in the trades area, that's not going to be as good as an accountant who works with a number of healthcare practitioners, be they physiotherapists and or other types, such as chiros, occupational therapists, NDs, SLPs, etc. Anything else to ask? I would obviously do the Google before I met with the accountant. I would look at their firm. I would look at Reddit. Do they have any, one that is touting their wares, or anyone who is saying, hey, watch out for this person? Um, uh, just common sense, do a background check. Try and get a referral, and try and get a referral from another physiotherapist, as opposed to another practitioner or another tradesperson, etc. So that's what I would recommend. Okay, makes sense. Thank you. You're more than welcome. And anyone who's still hanging around, and I hope there are some of you, generally what happens when you leave the doctor is you go, oh, I should have asked this question. Well, when you leave the webinar, you go, oh, I should have asked Brian. You can reach out to Allie. She'll redirect it to me, or you can reach out to me directly. I'm happy to assist you guys. And if you're going to Interaction in March, then please drop by my booth and say hello and I can't see who you are this way. A live seminar, I could, but I can't this way. But I would love to meet you. So reach out anytime. Ali, anything else?
Actually, yeah, I put a question in the chat that a couple people are building on. I just asked if when you incorporate and you leave money in a corporation, I know it's sort of like a tax shelter, but is it like an equivalent tax shelter to what a sole proprietor would use with an RRSP? And then there was a couple people asking questions building off what I just asked.
Okay. So I missed that question. So let me answer it. So I'm going to get a bit into the taxes. So I have a sense of humor. I'm not an accountant, so bear with me. But when you have a corporate entity and you earn $1 in a corporation, by the time it gets out to you personally, it's the same after-tax dollar. Okay, so let's say you earned $1 in the corporation and you only needed 25 cents. So you take 25 cents out. That 25 cents is going to be taxed no different than an independent contractor. Okay, and that independent contractor will take that 25 cents. Let's say they put 5 cents into an RSP. Person who draws that 25 cents out of the corporation and they put that into the RSP, they're both going to benefit the same way. Okay. So an RSP doesn't impact the corporation, it only impacts the individual. All right. That's really important because corporations can't have an RSP. Really, really important. They can't have a tax-free savings account. But the money that you're leaving inside a corporation, depending on which province you're in, is going to be taxed at a rate of approximately 15 to 20%. Okay, versus someone who's able to leave 50,000 in, they're probably making upwards of 150 to 200,000, and that tax rate is going to be 45%. So there's a 30% tax savings in doing that. But you have to be able to earn enough individually for it to make sense to incorporate. Ali, does that help?
Yeah, that does help. Thank you.
Okay, great. Uh, okay, James, that's a great question. Let me just, before I see I've missed a few questions, so hang on a second. I think I have a question. I'm not sure if you saw it. I didn't. Okay, so hopefully I've answered that. Using individual. Okay, so James, IPPs, IPP, by the way, stands for individual pension plans. There are a lot of potential negatives and some very big positives. It's not an area that I work in, but what I would ask you to do, James, is send me an email, give me some of your parameters, and then I'd be able to get back to you and or connect you with someone who does IPPs on a regular basis. There are, again, some significant advantages, but there are some disadvantages, and it really depends on your situation and how much retained earnings you have in your corporation. In other words, how many years have you been saving that $50,000? And, is it in the operating company? Is it in a holding company? So it's really a very advanced discussion. And I think I'm going to put everyone else to sleep. But I certainly don't want to dismiss the question. Please reach out. Okay. Thanks, Brian. Okay. Okay. So HF is asking, are there general ways to manage funds left in a corporation? So there are two types of monies that are going to be able to be invested in a corporation. One is money that is needed in the short term. And in the short term, you can use a high interest savings account. The one that I recommend is through Manulife Bank because their Advantage account is also available to a business, and you're actually going to earn interest on that money inside the corporation, whereas most banks don't have high interest savings accounts that are available to corporations where they're able to earn an interest. Okay. When it comes to the money that you leave in there year after year after year, the question on how to invest that is really dependent on how much, looking at the insurance world, because insurance does become an option for savings in a corporate format. As James mentioned, individual pension plans. You can also do all kinds of retirement compensation agreements. There's the question of, RSP plans, pension plans, etc., that you can look at. But you can't do an RSP. You can't do a TFSA. You only have the ability to do non-registered investments inside a corporation. And so you have to be careful that the amount that you're investing doesn't throw you into a tax area that you don't want to get into, such as alternative minimum tax on a personal basis when it comes out, looking at whether you're a small CCPC, a Canadian Canadian controlled private corporation. And that means that you can't earn above a certain level. Probably more relevant to some entity like a LifeMark or a large entity. So I don't imagine HF that you're asking in that regard. But again, it really is. Told you my degree's in psychology, or at least part of it is, and it basically is. It depends on your situation. I see a couple of other questions. Let me get to them. And okay, iPhone said it's informative. Good, I'm glad. Rushy, last question. No, Rushy, it's not your last question. It may be for this webinar. You will have other questions. Reach out to Ali or myself. Okay. If we have corporation, can we invest in RSP for personal? Yes. So Rushy is saying, if you have a corporation, can you still do an RSP? Well, if the money's staying in the corporation, Rushy, and you're not taking any of it out, then you have no income for you to contribute to an RSP. If, however, you're taking money out of the corporation, that money is now personally earned, and depending on how you're earning it, it's going to be eligible to be deducted against your income through an RSP. So the answer would be yes. Okay. And that's also sort of, when I have these questions, my mind goes 1,000 different places. I apologize if I'm scattering around a bit. But one of the things that is very common when it comes to physiotherapists and other healthcare practitioners is you throw all your money back into the clinic or clinics, and you forget about your retirement. You have a home, and your home becomes your retirement, and the sale of the clinic becomes the retirement. You better make sure that you're practicing in a way that your clinic is valuable enough to help you with your retirement. And you also want to do some individual investing through RSPs and other means. Okay. Okay, Stephen, thank you for the very informative. Great, my pleasure. Brian, thank you. HF. And I think HF was here last time, so hopefully HF will see you next week. Does money typically stay in the company until retirement? Okay, so Ali's asked a great question. So you leave the money in the corporation. How long do you leave it there? What does it do there? So the first thing is and it's called retained earnings, money that you're leaving in the corporation year over year over year. Depends on, is there just you as the shareholder? Are there multiple shareholders? It can be doled out in various ways along the way. It can be done at retirement. Once you get enough money in retained earnings, you want to remove it, though, from the operating company. Excuse me. So at that point, let's say you have a clinic, you're a sole proprietor, you then incorporate because you're earning enough income, and you've now got, let's say, 200,000, 250,000 sitting in your corporation that you're not using. And that would be better to be dividend up to another corporation and getting it out of the operating company, because the operating company would be what would be liable excuse me, whereas the holding company wouldn't. So you're protecting your assets that way. And there's also additional planning, tax planning that you can do in a corporation. There's also, if you have family, there's family trusts that we can, sort of bring into the fray. Generally, money's left in there and it's either sold as part of the entity when you go to retire, or if you've had some financial advice, you've moved it up to a holding company, and then you can draw an income from the holding company at a later point in time for retirement. And that would get back to how do you invest the money in a corporation. And you can't do it with an RSP, you can't do it with TFSA. That is where an IPP, individual pension plan, can come from. And again, because of all the plugged up loopholes and the restrictions that are being imposed on self-employed individuals, business owners, insurance for savings has also become an option. Okay. Ali, did I answer the question?
Yes, you did. Thank you.
Okay, no problem. All right. Anyone else?
Hi, Brian. It's Amy on the line. I'm just going to interrupt with a little preview for our people still on the call. So the OPA will be looking in the next couple of weeks for some new volunteers on our finance committee. And we've seen so much great engagement during these sessions and great questions. So we clearly have a group of really knowledgeable, but also wanting to learn more, a group here. So please keep that in mind. Email Ali if you're interested, but we'll send an email at the end of this 4-part, let's say, School of Brian Shumak. And if anyone's interested, they can let us know. So.
And I do have to comment one very quick thing. Katir said, thank you very much. Very helpful, sir. Please don't call me sir. Don't call me Guy. I'm neither above nor below you. Brian is what you call me. Doctor was my father. Mr. was my grandfather. I'm Brian. All right. There you go. Okay, good. I'm glad Katir is still there. And Rashi, you're very welcome. I see there's still 27 people waiting for someone else to have a question. What I can tell you is that the only stupid question that I've ever seen is the one that is not asked. So if you think your question might be stupid, I assure you that of the 25 people remaining in here, at least one of them has the same question. So please, I'm happy to stick around as long as you guys have questions. Ask away, and please do attend next week. You thought this was interesting. Next week will be a lot of fun because we'll be talking about investments. Okay, still not seeing any additional questions. And we're slowly shrinking.
Yeah, I think we'll give it about a minute and then I'm going to stop recording now and we can just stay on the line for another minute or so. And then in case anyone has a question.